All right, let's jump right in. This week, the Indian market is, well, it's on a knife's edge. It feels like we're watching a massive tug-of-war between two absolute giants. So the question is, who's pulling the rope? And which way is it about to snap?
You know, to really get the mood heading into this week, you just need to hear what the analysts are saying. And the phrase that keeps popping up is this one. The sentiment isn't just a little cautious, it's very, very bearish.
And that feeling, it actually has a number attached to it. Right now, the Nifty 50 is expected to open with a pretty significant gap down, around 120 points. That is a rough start to any trading week.
So, you have to ask, right? What's really going on here? What's driving all this negativity? Is this just a bad mood, or are there some deeper currents at play? Let's break it down.
Okay, first up, let's look at the immediate pressures, the stuff that's got traders bracing for impact right as the market opens.
It really feels like a perfect storm of factors. I mean, first, the market ended last week on a pretty weak note. Then, you've got history telling us that September is usually not a great month for stocks. On top of that, India has actually been the worst performing market over the last 3 months. And to cap it all off, the US markets are closed, which means trading volumes are going to be thin, and that can make any move, up or down, feel way more dramatic.
But look, all of that's just the opening act. The real story, the main event for this market, is this absolutely massive conflict playing out between two financial giants.
I want you to picture a giant market tug-of-war. On one side of the rope, you have these huge headwinds trying to pull everything down. We're talking US tariff threats and just massive selling from foreign investors. But on the other side, digging their heels in, you have powerful domestic investors buying everything up, holding the line, hoping the government can step in and help.
The biggest weight on that rope, without a doubt, is the threat of those US tariffs. I mean, we're already looking at 50%, and there's talk it could go as high as 100%. That kind of uncertainty is exactly what's spooking foreign investors.
And just how spooked are they? Well, the numbers are just staggering. In the last month alone, foreign institutional investors have pulled out 66,000 crore rupees. That's a huge amount of money heading for the exits.
But, and this is the incredible part, here comes the other side of the rope. In that exact same period, domestic institutional investors have poured in a jaw-dropping 118,000 crore rupees. They are literally buying almost twice as fast as the foreigners are selling.
So let's be really clear here. The only thing that has stopped a much deeper market collapse is this powerful, relentless buying from our own domestic funds and investors. They are the defensive wall holding everything up right now.
Now, this intense battle isn't just happening in the stock market indices. Oh no, it is sending ripples across the entire economy, and it's creating some very clear winners and losers. And you can see that split so clearly right here. The defensive sectors, things like consumer goods, they're actually holding up pretty well. But the sectors that really depend on a healthy economy, like real estate and capital markets, they are getting hammered, down over 4% and 7% in just the past week.
And this kind of volatility and uncertainty, it triggers a classic investor reaction. It's called a flight to safety. Basically, when risk feels high, people pull their money out of things like stocks and run towards assets they see as safer harbors.
You want proof of this flight to safety? Exhibit A, the Indian Rupee. It just hit a record low against the US dollar, touching 88.2. A weakening currency like this is a textbook sign of economic pressure and money leaving the country.
So, if money is running from stocks and fleeing the rupee, where is it all going? Exhibit B, gold. The price of gold just hit a new all-time high in rupee terms, over 10,000 rupees a gram. This right here is the flight to safety in action.
Okay, so with this epic battle raging, what should we be watching? Let's get into the key levels and the major events that are going to decide who finally wins this tug-of-war.
For the Nifty 50, these are the battle lines drawn in the sand. The floor, the key support level, is right between 24,170 and 24,300. The market has to hold that line. The ceiling, or resistance, is up around 24,600. We are truly right now in a make or break zone. If we slip below that floor, the next stop could be a lot lower.
Now, there are 3 key events this week that could tip the scales. Keep an eye on the GST Council meetings. We might get clarity on tax cuts for cars. We're also going to see the monthly auto sales data, and the word on the street is that it's going to be weak.
And finally, the SCO summit. Any positive news from that could give the market a much-needed shot of confidence.
And that brings us right back to the central question, doesn't it? You have this unstoppable force of domestic buying crashing into this immovable object of foreign selling. So which side is finally going to give way? That is the billion-dollar question that's going to define this week.